What's up? So, I'm going to take a little break from my oil tanker extravaganza Sunday here and take a look at swap lines in the international monetary system, how US dollars are working now, what are the changes in the system, and gold miners, because I just saw an interview with Marin Katusa on the George Gammon uh, YouTube channel, and yeah. And Marin literally blew my socks off. So we got some good stuff here and a killer chart on gold producers. And let's take a look. This is Brian Lewis with MMT Investing, and things just changed. So what Marin has been doing is looking up different jurisdictions and researching the international monetary system. And the big change that's happening right now is that Marin is smashing that like button right now. Please do help me out with the YouTube algorithm. Rhino Ralph says thank you. And um and what he's figured out is that the countries the countries that have these new swap lines set up, the United States is going around to different countries and trying to make deals and set up swap lines for the monetary system. And what a swap line means is that the country has a direct connection to the Fed, and the Fed can directly exchange US dollars for their local currency, and they have a different interest rate for each country. But basically, the countries that successfully set up swap lines are basically friendly to the US, and the US will give them the dollars they need to pay any US denominated loans. And then the jurisdictions that do not have swap lines are basically fighting with the US system, and it's a risky jurisdiction to have. Well, he's focusing on the miners, on the gold miners here, but in general, those jurisdictions are jurisdictions that have the highest chance of a political problem for commodity companies. Like if it's an American-based commodity company over in wherever, he was talking about like Papua New Guinea, for example, is threatening to nationalize some of the gold mines that are owned by foreign corporations right now. So that is a brand new change in the international monetary system that's pretty huge, and it's a brand new political risk to look at when you're doing specifically commodity investing, because Marin Katusa he's like the, I don't know, he's a really famous commodity investor. He talks about uranium a lot that nobody talks about. So he's the radioactive man of commodity investing, and he doesn't mind being controversial, and he really likes good data on political risk and on value investing and upside. And so this is basically a political risk chart, and he doesn't list out all the jurisdictions that have good swap lines and which ones don't. That's all in his data, but he has released this chart, which is really good, and it takes a look at here. Let's take a look at this chart. So this chart is looking at gold production from the top 10 gold producing companies. These are the gold miners, or not necessarily miners. I think it's also streaming companies and stuff like that. But he has this split in half by jurisdiction. Do they have good swap lines in their jurisdiction, or are they going to run into political jurisdiction problems potentially, uh, as the monetary kind of situation, accelerates out through this crash in the next few months, and then probably over the next, who knows, 3 years to 50 years. This could be a huge issue with political jurisdictions and the commodity companies and different countries trying to nationalize mines and things owned by American corporations, to cover their US dollar debt losses. So let's just take a look here. Like Newmont is a really big gold producer, and they have a lot of their commodity holdings in good jurisdictions, whereas like PGSC and Navoi have 100% of their of their holdings in questionable jurisdictions, or like Freeport here also. So these three are questionable jurisdictions, and like he says, Agnico Eagle is has the best portfolio as far as jurisdictions go, but I mean, he said he doesn't own this because he doesn't like the price right now. This is a really good look at the monetary system, at the changes that are happening, new political risks that are coming up, and a whole set of gold mining and gold kind of streaming companies and commodity companies that we can look at with a completely different view, with this new idea of political risk and the dollar debt. How big of a threat is a dollar debt? If you have a big dollar debt in a bad political jurisdiction, that's a really big threat. So it really changes the kind of stability outlook of these commodity companies, because we're going to be coming into a period where it's a value investing kind of spot to get into long-term commodity holdings, but which ones are going to be good and what is an actual good value price for these different companies? Because a lot of the gold companies are trading at like 3 times what the value should be right now. And if the gold price goes up, like where is a good spot to get into gold miners? And then there's other commodities like uranium and metallurgical coal that are at historic lows right now and should be picking up over the next, who knows, 2 years or 20 years or something. But these are really good stocks. I know these aren't going to be super buzzy right now. People aren't looking up like metallurgical coal all over the internet at the moment. So I should probably mention all of the oil tankers right now, like Nordic American tankers and DHT, the double hull tankers. Euronav is a really big one. That's a crude oil commodity tanker company. And TK, the TK tankers. Those are my 4 top crude oil tanker companies I keep talking about. And so those are mostly good jurisdictions, and they have ports in China and things like that. So you don't have to worry about the jurisdictions as much with those kind of companies. But if you start getting into like mines and commodity companies, the jurisdictions get really important. And as you can see, almost every company has some extra political risk that people aren't taking into account. So yeah, I will mention, I guess he mentioned Mexico as a really, really good commodity jurisdiction, because they have really good swap lines and they have really good mines, and it's a really stable and profitable mining jurisdiction. So he did mention Mexico. He didn't produce the entire list of good swap lines, but I'm sure it's all the usual suspects like, Canada and Mexico and a bunch of Europe and Japan. Like those are the places that are going to have the good swap lines. And then the other places around Asia and the Middle East is going to be a bunch of negotiations. And you have Russia and China with pressure. So Russia has completely de-dollarized, and Russia has stacked gold. So like Russia is already trying to build an external kind of gold-based monetary system, and there's a bunch of players in Asia, the Middle East, and through Europe that are talking about that kind of competing currency system now. And America is working on reconnecting all of the out-of-control international banks back with the Fed, and just kind of restructuring the international monetary system to be more centralized and less international banking control, because the international banking system has kind of hit a wall and made a mess here. So that's kind of the outlook on the monetary system right now and the jurisdictions, and things are changing. This is Brian Lewis with MMT Investing, and things just changed. So this really is, when I talk about MMT Investing, the whole name of the channel, the point of this channel is how to invest in these new political and monetary, this investment environment. The fundamentals have changed. The monetary system has changed. Like we did not have the same monetary system that we had 1 month ago. Well, 3 months ago. But February 20 marked a huge change in our monetary system. It's the blow off top of a huge bubble of the entire Eurodollar international monetary system. So this swap line thing is another huge change. I mean, we've seen we've seen the Fed open a FEMA, an international repo market. Repo market is a swap, is not a swap line, but it is where you trade collateral overnight for liquidity, and that is fundamental to the international banking system to get liquidity. But the repo markets are failing, so they've opened a new repo market directly to service these international banks, called FEMA, and they're creating all of these four-letter word um, kind of programs to directly do MMT, basically, so the Fed can directly send money to the places where it needs to go. But the Fed is a bureaucracy. It's not connected very well right now, and everything that they're trying to do is just like it's not working yet. The international banking system is not working, and the new stuff that the Fed is trying to do is not working yet. And we're in this huge monetary contraction right now. So this is kind of a long-winded macro look out, but if you are interested in gold, and this is not investment advice, this chart is amazing. Marin Katusa, all of his stuff is going to be amazing, probably a bit expensive for individual investors, but yeah, just having a clear look at the political jurisdiction risk when you're looking at mining companies and that sort of thing is another huge thing, because the diversification risks, if you're holding like physical gold or owning a gold fund like through a brokerage, or owning mining shares through a brokerage, like those are all different levels of risk, like political risk and also counterparty risk with the companies that you're dealing with. And so when you are dealing with a corporation, you have a brokerage account with a corporation that has holdings in a foreign jurisdiction, and that foreign jurisdiction has bad swap lines. That's multiple levels of counterparty risk, and any one of those rungs in the ladder could go bad, and it could be really bad. So you wanna know how to hold the things correctly and hold things that are going to be profitable in stable jurisdictions, if possible. So that's kind of the outlook of the monetary system for today, and how commodities are going to play in, because commodities are going to be really big as all of these. Like the stock market, the last 10 years has made no sense. Like people have been investing in things that are obviously not profitable. There's companies just springing up out everywhere that they're blatantly making no profit, and they're just racking up huge debt, and now all that debt is coming due. So this is what's happening now, is all of these companies that make no sense are going to get a reality check, and buy and hold investors holding all of these unprofitable companies are going to get in trouble. And we're gonna have people lose a lot of money. We're gonna have companies going out of business, and protecting yourself in this kind of environment and investing and actually making money in this type of environment. It's a huge switch in fundamentals and strategies, and that's what this channel is all about. And this right here is the exact type of data that I am talking about, that I love to see, because this is the new system and the new data. And this is what investing is going to look like here over the next couple of years, over the next, who knows, 30 years or something, as the US dollar gets challenged as the world reserve currency, as jurisdictions start doing whatever they need to do, to cover all their loans and survive in this kind of situation. So Marin Katusa, the radioactive man of commodity investing and, political jurisdiction risk, uranium, gold mining, stuff like that. He is great, and this is the kind of info that he puts out. So I always love to hear what he has to say. And thank you for watching. Please hit the like button, and happy trading.